Oil prices are up another 3% on fears of escalating Middle East conflict. Friday's bumper US jobs report has seen bets for a 50 basis point cut by the Fed in November evaporate. And China's stock market braces for a renewed surge after the Golden Week holidays. That's coming up in our 5 Things in 5 Minutes. And then in our bonus deep dive interview, ANZ Economist Henry Russell says there are signs the Reserve Bank of New Zealand's August rate cut may have already spurred some housing market activity.
One indicator that we do follow closely is the Barfoot and Thompson Auckland auction clearance rate. That has been steadily increasing for over recent weeks and does actually point to some mild upside risk to our house price forecast.
But first, in 5 and 5 with ANZ, oil prices are up another 3% at 4 a.m. Sydney Melbourne time, with Brent touching $80 a barrel for the first time in 5 weeks. That's on reports Israel was looking to attack Iran's oil infrastructure. Meanwhile, the ongoing fallout to Friday's bumper US jobs report has seen bets for a 50 basis point cut by the Federal Reserve dry up. The yield on the US 10-year Treasury rose 5 basis points to above 4% for the first time in 2 months, while the S&P 500 was down 0.3%. ANZ economist Bansi Madhavani says markets had been pricing in a 30% chance of a 50 basis point cut in November ahead of Friday's jobs report, but no longer.
Markets are no longer pricing a chance of a 50 basis point move in the November meeting, and that compares to around 30% odds priced before the last week's labour market report. In fact, for the next 2 meetings lined up in November and December, the odds are now leaning the other way. Pricing has now shifted to whether the Fed pauses in light of strong economic data. Currently, around 20 basis points of easing is priced in for November, and a similar size cut is priced for December as well. But it's important to note that that's lower than the conventional 25 basis points easing. Our own view is that the Fed will stay on the easing path, primarily as it aims to bring rates down from elevated levels closer to neutral level. We see the Fed cutting rates by 25 basis points each in November and December.
The US dollar index was down 0.08% at 4 a.m. Sydney Melbourne time because of weakness on the major crosses. The Aussie dollar was down 0.5% at 67.60 US cents, while the Kiwi was down 0.56% at 61.24 US cents. Number 2, China's stimulus moves in recent weeks mean there's now a chance it could achieve its 5% growth forecast for 2024, which is a turnaround from expectations in recent months, says ANZ economist Vicky Xiaozhou. She says markets will open in China today for the first time in more than a week in a buoyant mood after National Golden Week holidays.
I think the public feeling quite excited about the market reopening. Anecdotally, a lot of households, including grandma and grandpa, they are holding cash and want to chip in to the equity market. We do see the top management will be aware of this situation and will manage the financial risk carefully in the next week.
Number 3, the Reserve Bank of India makes its interest rate decision on Wednesday and is expected to hold, albeit with a less hawkish tone. Here's ANZ economist Dhiraj Nim.
Well, we do think that they will dial down their hawkishness, primarily because inflation has been running softer than they had expected. But they're not going to sound extremely easy about the situation because inflation is still far above the target, and they will remain committed to achieving the inflation target over the forecast horizon.
Number 4, Vietnam has reported much stronger than expected growth for the September quarter of 7.4% from a year ago, which was well above the consensus forecast for 6.1%. ANZ economist Kosani Basak says Vietnam's position as one of the beneficiaries of China's friendshoring of tech exports was a big factor.
Vietnam has been one of the largest beneficiaries in the region from the ongoing tech cycle. So most of the growth has been driven by the export sector and the FDI inflows that has been steadily arriving to Vietnam. And its domestic sector growth has been moderate as compared to the export sector.
Number 5, Thailand's finance ministry reportedly wants to raise the country's inflation target to increase pressure on the Bank of Thailand to cut rates. Annual inflation edged up slightly to 0.6% in September. That's below the current 1 to 3% target. It has been above 1% only once since April 2023. ANZ economist Crystal Tan says a rate cut might be on the way.
The key watch point really is going to be the growth outlook. We think the risks to the Bank of Thailand's growth projection are tilted to the downside. If we look at recent economic data, it's still looking like a sluggish and uneven economic recovery, and coupled with rising concerns about asset quality, also the scaled back near-term boost from fiscal policy, we think the Bank of Thailand will turn more open to lowering the policy rate in the coming months. So we do see scope for a 25 basis point cut towards the end of the year.
Crystal tan there. Now, in our bonus deep dive interview, ANZ Economist Henry Russell is seeing tentative signs that New Zealand's housing market got a shot of confidence from the Reserve Bank's rate cut back in August. Here he is talking to my colleague Alex Tarrant about upcoming Real Estate Institute data for September.
Moving forward, August data only covered, if you recall, the August NPS was in the middle of that month, and so we've only seen about 2 weeks of actual data following that decision. And look, that is going to take time to flow through, but certainly the anecdotes we've heard that housing market activity is picking up, and one indicator that we do follow closely is the Barfoot & Auckland auction clearance rate, which is a weekly series and does provide, as a very timely indicator, it provides around a 3-month lead on changes in sales activity and in turn around a 6-month lead on changes in house prices. So that has been steadily increasing for over recent weeks and does actually point to some mild upside risk to our house price forecast if you take that indicator at face value. That's just one piece of the puzzle, obviously, but certainly moving forward, we are keen to see the September cut of the data, which will provide the first snapshot of the housing market post the RBNZ's decision to cut back in August.
Just looking then at the property focus note you've put out based on that August data, you've had a look at differences across regions. Tell us, is there any sort of key factor in terms of how regional house prices are performing?
Well, unsurprisingly, the regional housing market performance in New Zealand has been pretty similar, and that just simply reflects the fact that the biggest driver of the housing market over the past few years has been the same in every region. That is restrictive interest rate settings in response to high inflation, and then the consequence of that being weakening economy and rising unemployment. That being said, there have been some differences in performance, though every region has followed the same kind of pattern. The regions that have generally performed strongest over this period have been those that started this housing market cycle. If you think back to pre-COVID, they were the most affordable regions are the ones that have seen the strongest growth, while the least affordable regions have actually seen the weakest performance over that period. Demand does shift in response to changes in affordability, and that's what we're seeing. There has been a shift away from Auckland, for example, in terms of demand, and that's flowing through to other regions, and as buyers look to find a better deal outside of the big smoke of Auckland.
Is that flowing through into like the other major centres or regional housing markets? Is it like a story of people retiring, picking up their belongings in Auckland and going for a nicer life somewhere else?
Yeah, that's certainly one example. Look, at the end of the day, people with incentives to go on and where they live reflects a number of things. If you're working age, it likely reflects access to employment and the economic prospects. Then other factors such as the relative supply-demand imbalances in certain regions also factor. So Auckland has actually seen while it has been it has seen the weakest house price growth since pre-COVID. The part of that story is, as I mentioned, the affordability side, but there's also a lot of other factors. Auckland has been building above the rate of other regions, adding a lot of supply, and that all else equal is going to take pressure off prices. But that's just one side of the story, and obviously there's the demand element too, and New Zealand has experienced very strong net migration inflows over the past few years, which are now starting to trail off, but Auckland was the primary destination for the vast majority of those migrants. And so while we have been building a lot of homes in Auckland, there's also been additional demand pressures. So all that said, look, there's a lot of reasons why we might see differences, but overall, we have seen the southern regions of New Zealand and the South Island, those are the regions that have overall had better experiences or better performing housing markets over the past 4 years. And so it's not necessarily a story about main centres as well. So for Auckland and Wellington, in fact, have actually seen very weak housing market performances over the past few years. But Canterbury has performed very strongly, with Christchurch being the other major city in New Zealand. So it's not just a story of retirees potentially looking for a quieter lifestyle. There's a number of factors that go into it.
Henry Russell there, talking to Alex Tarrant. That was 5 and 5 with ANZ for Tuesday, October the 8th. Catch you tomorrow with a last-minute preview of the Reserve Bank's expected rate cut. Will it be 25 or 50? This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.